Welcome to today's deep dive. We are breaking down the massive forces shaping the market right before a huge Federal Reserve announcement. Seriously, the stakes couldn't be higher, and whatever happens today could really set the tone for the next few weeks.
Okay, let's just jump right in with a fascinating puzzle. You look at the stock market, right? The S&P 500 is just a stone's throw away from its all-time peak. That should mean confetti and champagne, but it's not. Instead, you can just feel this sense of fear gripping investors. And, it's not totally out of nowhere. Inflation's been sticky, there are geopolitical risks, but that's what makes this whole thing so weird. What is really going on?
And this slide, well, it just lays that contradiction out perfectly. On one hand, you've got the cold, hard data. The index is less than 1.5% from a record. But on the other hand, the vibe, the mood, it's just pure anxiety. And it's this disconnect that we really have to get our heads around to figure out what could happen next. So here's the bottom line. All of this tension, this tug of war between the numbers and the nerves, it all comes down to the Federal Reserve. Today's announcement is not just another meeting. Nope, it is the one thing that could finally break this stalemate and just maybe unleash the market's next explosive move up.
So, what's this whole argument for a huge rally? Is it just wishful thinking? Not at all. There are actually four really powerful drivers at play that suggest the market is basically a coiled spring, just waiting to pop. Let's break them down.
So, driver number one is a classic market idea, the theory of contrary opinion. Basically, it says that when almost everybody is scared and betting on a downturn, there's hardly anyone left to sell. That means the path of least resistance is usually, you guessed it, up. It's all about catching that fearful crowd completely off guard. Second, there's this really interesting political angle creating what you might call a safety net, especially since it's an election year. The market seems to believe that even if the Fed sounds really aggressive on inflation today, hawkish, that tough talk won't last long. The expectation is that political pressure would force them to promise rate cuts down the line, which, weirdly enough, creates a bullish outlook almost no matter what they say. Now for the third driver. And honestly, this might be the most powerful one of all. It's all about this number, $8 trillion. It's a number so big it almost doesn't feel real, but believe me, it is, and it puts a massive leash on the Federal Reserve.
And this slide just shows you the pickle the government is in. By 2026, they have to refinance all $8 trillion of that debt. Now, if interest rates are high when they do that, the cost to just pay the interest on that debt would absolutely explode, and that would put a huge strain on the entire federal budget. So that reality creates this powerful, constant pressure on the Fed to keep rates from getting too high.
Okay, let's move on to our fourth driver, because it's all connected. Beyond just interest rates, the market is completely obsessed with one thing: liquidity. The cash that greases the wheels of the entire financial system. So, if you strip everything else away, what is the one single thing the financial system needs to work smoothly, to avoid grinding to a halt, especially when things get stressful? The answer's really simple. It needs a system that runs without tension, without friction. And guess who has the ultimate power to make sure that happens? The Federal Reserve. They can inject liquidity, or cash, into the system whenever it's needed. And that brings us to the magic number that everyone is watching for today. Any signal from the Fed, even a hint, that they're ready to inject more than $30 billion in liquidity, well, that would be seen as a massive green light for the markets. And the impact wouldn't just be for stocks. As you can see here, that kind of cash injection is seen as a huge tailwind for pretty much every major asset out there, from the S&P 500 to gold and even a Bitcoin. It's that classic rising tide that lifts all boats. And hey, speaking of Bitcoin, it's so important to remember that these huge macroeconomic forces don't just push the stock market around. Oh no, they have a massive direct impact on digital assets too. So if we take a look at where Bitcoin is right now, we can see it's bouncing back. But this move seems to be mostly driven by short sellers giving up and closing their positions. It's missing that one key ingredient, a new wave of fresh cash coming in. So while the outlook still looks pretty good, as long as it stays above that key $91,000 level, it probably needs a catalyst, like say a major liquidity injection, to really push it toward its next big target in that $96,000 zone. Okay, phew. We've covered a ton of ground here, from market psychology to government debt and even crypto. So let's pull it all together. What are the absolute key things you need to be watching for today?
Here's your checklist. First, listen very carefully to the Fed's tone about rate cuts for 2026. Second, watch for any mention of liquidity injections over that $30 billion mark. Third, just watch the price. The market's first gut reaction can tell you so much. And last but not least, remember that theory of contrary opinion. Widespread fear can be rocket fuel for a powerful rally. So, we've laid out a pretty clear, logical case for why the market could be on the verge of a really big bull run. It's backed by some powerful financial and political forces. But here's the ultimate question. In a market that's driven just as much by emotion as it is by logic, will all these strong fundamentals be enough to win out over all the fear? Well, that is the trillion-dollar decision.